Welcome to the Possible Promise Podcast. Every Monday, Wednesday, and Friday, we go live at 12 p.m. Eastern to break down the complexities of finance and point the way to financial success. Today is July 10th, 2020, and I am your host, Brandon Oliveris.
And I'm his wife, Christine.
This is episode 12, Finding Peace in the Market. Welcome everyone. Thanks for joining the podcast. Happy Friday. If you enjoy Fridays, it depends for me how the week went.
I love Fridays, just in general.
You have no reason to like Fridays.
But I do.
Why?
It's just like, it's Friday.
Yeah, but they're all the same.
You always used to say that too.
Anyway, I'm sorry we weren't here on Wednesday. I don't know if you noticed. I'm sorry if you tried to tune in live. But Wednesday was a little bit crazy. It was kind of going against us, and I don't like to force things if they're just not happening. So, kind of made a last-minute decision. We weren't going to do Wednesday. So
we're still trying to figure everything out.
It was actually super weird. Like after all the weirdness, it kind of felt weird not doing Wednesday's show. But
did it?
Yeah,
you didn't tell me that.
I did not. I was going to tell you this morning. I didn't.
Of course not.
But we're here now. We pushed the topic to today, so you're not missing anything. But yeah, it just was kind of crazy what was going on. So don't like to force things if they're just not working out. It's kind of like a sign, like, okay, well, that's just not supposed to do this one. So
sometimes it happens.
Yeah, so that happens. So, but today's Friday. And it's been an interesting week in the market. We'll talk about our week in review in just a few minutes. But today is, well, let's see where we are, I guess. Let's see. Oops, wrong window. It's been kind of up and down today. Anyone's guess where we are now? We'll just have to see. Yeah, so we're up about 13 points in the S&P. Only about 41 basis points. About 200 in the Dow, and about that's about 0.8% or 0.79% before Christine is nitpicky.
I was nitpicky when you said 12.9. When it said 12.9.
And the NASDAQ, everyone, is down 3 whole points, a whole 3 basis points. And I'm saying that because it's just been nonstop up this week, just nuts.
Was it yesterday that you were kind of like on Twitter, where it was like, shh, and you said, what did you say?
Oh, the S&P is in the negative, but not even the NASDAQ. The NASDAQ was up, even though everything was down, like most of 1% yesterday. I think the Dow was down over 1%. The NASDAQ was up 0.5% at the end of the day. It's just a crazy divergence, and I've talked about this a little bit before, where that's very unusual to have such a lengthy divergence between the indices, where the NASDAQ is going up and up and up, and the S&P and Dow, I mean, they're doing well, but not nearly as well as the NASDAQ, and that's just extremely unusual, and in my opinion, kind of a bad sign, because it's going to have to correct eventually. But the NASDAQ is actually a little bit down today. Who knows where it'll end up, but... And then the VIX, we are down about 3%. So I think this morning or yesterday we were a bit up. But yeah, it's just so things are more or less flat today. I mean, the S&P is a little bit up, but who knows? It's just been going back and forth. And not too much news. It was down this morning, and then there was news that came out that from Gilead or however you pronounce that company, their remdesivir that they've been developing. They had a study that it reduced mortality rate for the coronavirus, but was it 62% or something? So that's extremely good news. So obviously the market likes that. I'm actually surprised there's not a larger reaction than there has been. I mean, the market went up, but it's kind of, I don't know, it seems muted. Maybe, I don't know, who knows. A lot of times, like, remember last week when there was that positive vaccine news and it was like up over 1% or whatever.
Yeah.
So I'm kind of surprised it's so small. Maybe because they already knew about remdesivir. But
is that the name of the medicine? I was like, what are you talking
Yes, that's the name of the drug from Gilead. So yeah, that's been kind of interesting. So that's the reason for the up move today. But yeah, it's just been kind of up and down all week. So I think we'll review the week in just a second. So let's actually get into that because I don't want to overlap what we're about to talk about.
There you go.
Yeah. So let's do our. Let's see. Let me actually get there. Hang on.
What happened?
It wasn't going where I wanted to go. Okay, let's do our week in review. All right, our week in review. So again, the market's been kind of all over this week. So let's see. I'm going to see up to date what the S&P is at. That's the one I paid attention the most to. I know there's the NASDAQ, obviously, which I'll look at in just a second, just because it's been so far up. But the S&P is at 3167.39. So I already typed down before the start of where it was last Friday. Let me see. So we're up basically 1%, if I'm reading that correct. Yeah, 1.2%. So 1.2% for the week. It was kind of, like I said, all over. I mean, this morning it was not quite as up as it is right now. It was around 31.50, 31.45 this morning. So it's been kind of all over the place. But the NASDAQ, we're going to see how far that is up. Let me see. I'm sorry, that's going to take me a second to... So right now we're about 10,750. And last Friday... That's the second, right? Yeah. Last Thursday. I'm sorry. Scratch Friday. Friday was... We were off.
Close.
But on the second... 10,341. So... Yeah, almost 4% for the NASDAQ. So that's about, like I said, 1.2% for the S&P, almost 4%. And that's what I mean for the NASDAQ. That's the kind of divergence I'm talking about, where the S&P, yeah, it's up, a little over 1%, unfortunately. But it's not nearly as up as the NASDAQ. I mean, that's just, that kind of difference is just crazy. So that's really unusual. We'll kind of have to see what happens. I know one of the analysts I follow from Zacks, one of the portfolios I follow, they just started shorting the NASDAQ. They bought, it's the ETF, SQQQ.
Oh, okay.
Which is basically an ETF that shorts the NASDAQ. So they're expecting it to get, it's just a small position they opened up on it, but it's, to me, that's always a sign that they're expecting it to go down. So we'll just kind of have to see what happens. It's just been insane what's been going on already this month. I mean, just in 1 week.
You just never know day to day what's going to
happen. For myself, let me see. I was smart this week, and I wrote down as I closed out my positions, because I always try to go back on Friday and be like, okay, what did I close out this week? And it's hard to find it. So I wrote it down as it happened this week.
Wow.
Yeah, I know. It was a little more volatile of a week for me because of just how the market was going. Financials really got hurt this week, and that kind of hurt me. So it wasn't as good of a week. But my winning positions this week, XLP, let me refresh my memory on which one that is.
So you look it up anyway.
No. I know what the stock was. I'm saying with it, it's an ETF, consumer staples. Okay.
No, I know. I was just joking.
Anyway, XLP, which is consumer staples, TNA, which is a 3x bull ETF for pretty much the small caps. So that just means it's 3 times however far the small caps move. And so I shorted that this week, and that actually did really well, surprisingly. And then the Russell, IWM, that went really well. The Russell always makes me nervous because one of my first trades with it was just recently. I got crushed when I shorted it once, and so I'm always nervous to short it. But it's been kind of weak lately, so it's been working out pretty well for me when I short it. So those are my winning trades this week: XLP, IWM, and TNA. And then I actually do have a losing trade. I mean, unless there's a miracle today. U.S. Bancorp, USB.
Uh-oh.
Just because the financials, well, it was going to expire. It is expiring today, and I just couldn't really roll it for a credit, so I didn't really roll it out, even though I think it would probably recover, but I can't really roll it. And so just not enough time for it to work out. And the financials, like I said, this week, for the last couple weeks, have just been crushed. And so that one is doing poorly, and I'll have to close it out a loss today. There are a couple other financials I have, but they have a lot more time to work out, so hopefully they do. But that was my one loss this week. Yeah, that happens. And then I did roll out a couple. I don't remember what they were right now. I'm not about to look it up. So I think, I don't remember which ones I rolled out. Nothing today. I haven't really done anything today yet because I've just been kind of watching what happens, and nothing is immediately about to expire besides USB, which I can't do anything with anyway. So, we're just going to see what happens there. But yeah, overall, I mean, it's been pretty insane week. I really thought it was going to be a down week because, like, yesterday was down.
But then you did well yesterday.
Yesterday I did great. I was down most of the day, and then right at the end of the day, I shot up. It was really good. But yesterday I was down, or not I was down, the market was down yesterday, and one of the other days, I think Tuesday or Wednesday, I don't remember right now, was down, so I really thought it was going to be a down week. But we had that huge up move earlier in the week, and that really, it was like a 2% gap higher, I think, and that was kind of, that kind of covered over any kind of down move we had. I think that was Monday. So, yeah, I mean, you just don't know what's going to happen day by day with the market, so that's what's going on. But that actually goes really, 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 really well into the topic we're going to be talking about today.
Oh, good.
So I think...
We're just moving right along today.
Yeah, well, I mean, not much is going on, and we didn't have our Wednesday episode, and for my own trading, I didn't really do too much this week, because I've been just kind of hanging on and seeing where things go.
That's okay. It's Friday, so...
Yes. So, let me see. Let's get into our topic. Finding peace in the market. All right, so this is... I know this has kind of been a soft week of sorts. What I mean is we're not doing anything too technical.
Good.
Which Christine is pretty happy about, I think.
That means I could go to sleep while you talk.
No!
I
could not go to sleep while I talk.
Because you haven't done the Ask Christine.
I'm going to at some point.
I'm joking.
Anyway.
I'm not really going to go to sleep.
Obviously. So, this has been, I wanted to take it a little easier this week because we hit a lot of technical topics the last couple weeks. And I do have more planned there. One of my near future topics I want to do is the more advanced option strategies.
Maybe I will go to... No, I'm just kidding.
If anyone has any topics you'd like me to cover, especially on the technical side, but anything really, feel free to ask. We always have the Ask Possible Promise page where you can ask your questions, but I can also take it as topic recommendations if I think it's more involved. You can go to possiblepromise.com/ask if you want to submit anything there. So just, I have lots of ideas, but I want to see what you guys want to cover, and, just so I know that we're talking about the right things that everyone else wants to hear about. So anyway, I've been following this guy on Twitter. His username's like Trading Composure.
Yeah.
Right. And I've retweeted a lot of stuff from him. I don't know who follows me on Twitter. You can on Twitter I'm at Possible Promise, so you can follow me there if you want to. But I've been retweeting a lot of his stuff because it's really awesome. Now I have kind of a meditative, I'm not going to go as far as to say Zen, because I don't really like Zen too much, but a meditative background. A lot of what this guy talks about is very much like that, psychological, meditative. I even found, I didn't retweet this, but he had I told you about this, a guided meditation about, letting go of your worry about losing a trade.
That's so cool.
It was this really cool kind of...
You told me.
Yeah, I know I told you. I didn't know if you remembered.
Yep.
With this background of like ocean waves and all this kind of stuff.
Oh, it had ocean waves?
It did, yeah.
Cool.
It was awesome. So it was really cool. But I was really able to relate to that. But he's been talking a lot about trading psychology. That's kind of what he does, what he talks about. But he tweeted out this quote earlier this week, and I wrote it down. I wanted to use it for this because I just thought it was so perfect. And I think this is such an important topic because I'll mention the quote in a second. But I think this is such an important topic because, we talk about the strategies, we talk about, how to win the most trades, how to maximize your edge and all that kind of stuff. But what is that if you don't take care of the psychological part? Right. And I know some people kind of gloss over that. Oh, who cares, But
it's everything, though.
It's everything. Like, it's so important because if you aren't managing your own emotional response to what's going on in the market, you'll get discouraged. You'll want to give up. Heck, I just saw someone in the Facebook group I'm in this morning saying that they don't know if investing works for them, and it's just not been working out, and they want to give up. And I don't think anyone should ever give up at all. I think it's it's such an important thing to invest. So
unless it's just some people don't have the mind. Like I mean,
right.
I don't mean smarts. I mean the inward mind.
Yeah.
Like I don't know what I'm trying to say.
The composure. Yeah,
composure. You kind of have to have a lot of courage to do it.
Yeah, it's difficult.
They don't have the heart.
Yeah, I know what you mean.
Yeah. And that's okay. It's not for everyone, I don't think.
Well, I think some form of investing is for everyone. I literally think every single person in the world should invest.
Yeah.
Now, whether that's through index ETFs, index funds, or options, or individual stocks, or let someone else do it, or whatever.
Well, that's what I mean.
That's up to you. But I think there's not any good reason why every single person in the world should not be invested.
Well, what I'm saying more is like them doing it themselves, or...
Well, yeah, it just depends. I think the majority of people can either do it themselves or do something where it requires like next to no management at all.
Right.
So I don't think anyone should not be in the market, but I think it just depends what your risk, how risk averse you are, and that dictates what kind of strategy you take or how you go about it. Right. So, but this person was talking about wanting to give up, and I just don't think anyone should give up. There's just no need to. It's proven over and over again that over time the market always goes up. I don't think there's been any 10-year period. I could be wrong on this, but I'm pretty sure there's not been any 10-year period where the market has not grown. Right now, who knows with this year? With the rally, it's been back to normal. But with the crash earlier this year, that really removed a lot of our gains in the last 10 years. But I don't think there's been any 10-year period where the market hasn't grown. And the longer out in time you go, the more true that is. The market always goes up eventually, in the long term. So it just really... it's so important. But anyway, there's this quote that I think really speaks to this, and it has nothing to do with investing. It just has to do with more your emotional and mental response to life. But this quote, like I said, it came from this person I follow on Twitter, but it's from Francis de Sales, who's...
I knew you were going to do that one.
Yeah, I told you I was going to do that one, so that's no...
No, you didn't.
Yes, I did. Yes, I absolutely did. I said I'm going to do this. I'm going to read this quote on the podcast.
Oh, I don't remember.
Yeah, well, your subconscious did.
Okay.
Anyway, so here's what he says. Never be in a hurry. Okay, let me start this over, because I utterly failed at that. Never be in a hurry. Do everything quietly and in a calm spirit. Do not lose your inner peace for anything whatsoever, even if your whole world seems upset. So I love that. For multiple reasons, just never be in a hurry. I think that's so important because with anything in life, but especially with investing, like sometimes we're so much in a hurry to get it right, to make the right trades. We see an opportunity, we think we have to jump on it right now. We think this is the only opportunity that's going to be around. Mm-hmm. We're just always in a hurry.
You should put that quote in the show notes.
I'm going to, yeah,
okay,
obviously.
Good.
We just think we always have to be in a hurry. We always have to be catching that next opportunity. Like I see some of these day traders or swing traders, and I have no problem with that. Like I obviously I'm not a long-term trader. Like I do swing trading. But a lot of these people, it's so stressful watching them trying to find the next big opportunity and jump on it and worry about whether it's going to work out. And it's just like, that's unsustainable. You know what I mean? Like, it might be, if it's fun, great, but for a lot of people, it's just stressful. And that's just not how life should be, I think this should add to your enjoyment of life. It should not remove from it, And so, like, doing everything, or not hurrying with anything, I think is so important. I'm just trying to see all the elements of this again. So, never be in a hurry. Doing everything quietly and in a calm spirit. Just knowing that there's always going to be another opportunity, knowing that, it's not going to disappear just because you take a minute or two to make sure you're doing the right thing, to do due diligence, as we talked about your trade, about the stock, to just, double check yourself. You don't have to rush into anything. And in fact, usually I find if I'm feeling like I have to rush into something, it's probably a bad trade.
Yeah.
So never hurrying into anything, doing it quietly, doing it calmly. I think that's so important. Not giving up your inner peace. And I love the end part of this quote about even if your whole world seems upset, because everyone could be talking about it's the end of the world, it's, the stock is going to crash, the stock market is going to crash, and people often do, and people are, and I know I've talked about, I think it's way overvalued, which it is, but even if everyone in the world is saying the market's going to crash, or the stock's going to crash, or whatever's going to happen, like doom and gloom, you just have to keep going.
Yeah.
Even if everyone is panicking, you just have to keep going. And it goes back to the wonderful Warren Buffett quote, how's it go? Be greedy when everyone else is fearful, and be fearful when everyone else is greedy.
I love that.
Yeah.
That's awesome.
I could have got that reversed, but it goes like that. But, when everyone else is showing fear, then you want to jump in and be like, this is a good opportunity.
Yeah.
And when everyone else is greedy, just like right now, this is a time to be, I don't want to say fearful, but to be super cautious. Everyone is being greedy. Everyone is jumping in full force, is going all in, is just throwing all their cash into the market. And there's just insanity. Right now is a time to kind of be a lot more cautious, because this volatility, this constant buying up the market of everything, every possible thing you could imagine is up. Commodities are up, stocks are up, gold is up, bonds are up, oil is up, everything is being bought up. And that's just a time to step back and not be swept away by that, I don't want to say mass hysteria, but sort of, just to step back and say, wait a second, like, is this really a smart idea? You know, am I really getting in at the right time, and really evaluating that, you know, versus when everyone thinks that it's the end and that they're panicking and selling and selling and selling. If you had gotten in March at the low, and I'm not saying you have to time the low of the market, but when everyone was saying it's just going to, you know, crash like 50% or whatever, if you had gotten in back then when everyone was panicking, you'd be making out really well right now, no matter what you bought, pretty much, right? Especially if you had bought like Apple or Microsoft or Google or Amazon or any of those, Facebook, Twitter, you'd be really doing well, right? And so it's just a good principle to go by, but just, you know, knowing when to get in, depending what other people are doing. But no matter if the whole world seems like it's panicking and seems like everything's going to end, and you just remain calm, because that kind of panic is not going to accomplish anything.
No.
Right? Okay, so what if you miss one opportunity? It's not the end of the world.
It's kind of like doing the opposite of what the world is doing.
Pretty much,
because, you know, you have to, you know, be careful and do what you need to do, too.
Mm-hmm. So it's just, you know, that kind of peace in the midst of chaos, I think, is the perfect phrase for it, because you want to, you just want to manage your own emotions around everything. It's not worth worrying so much about. I mean, I remember hearing, I don't remember which of the crashes it was. It might have been the 1989 or something.
Brandon, you were born in 88.
I know that, but I remember hearing about it.
Oh!
No, I wasn't there. Yes, I was investing it when I was 1.
No, you weren't investing, but I thought...
No. But I heard about one of those...
Just the way you said it, I was like...
No, I said I remember hearing about it.
That's true.
I didn't say I was there.
No, I know. Okay, never mind.
Anyway. But I remember hearing about how people literally jumped out of their windows, like committed suicide, because the market lost like half of its value overnight, basically, you know. And that's sad. And I get it. You know, I do get it. I do get why people are so worried, but that just shouldn't happen. You can't let it steal your peace like that, you know. So it's so important to maintain that sense of calm and peace while trading. And I know, again, that seems kind of not that important compared to strategy and all that kind of stuff, but I think it's extremely important.
It's the foundation.
It is the foundation. So, you know, just like, okay, so with trading options, you know, and I've mentioned, let's say you target a 70% win rate, and with managing winners, which we'll talk about in the future, you could get that up to 80 or 90%, right? But you're never, ever going to win 100%. It's not a matter of practice. Like, you're not going to, oh, well, that was just a bad trade, and, you know, I just have to do better. I mean, maybe if you made a mistake with your strategy, but you're never going to win 100%. Like, no matter how well you do, every 100 trades, you're probably going to lose 10 or 20 of them. Mm-hmm. I mean, just no matter what you do, you can improve all you want, but you're going to lose. You're going to lose a percent of your trades. There's not one investor in the history of the market who has won 100% of their trades. I mean, look at Warren Buffett with his airlines purchase. He you know, bought up some airline stocks early this year.
He lost a lot, didn't he?
He lost a ton. Obviously, he couldn't foresee the coronavirus, but I'm just saying he lost a ton off of that. And it wasn't his fault. He didn't do anything wrong. He, you know, thought he saw an opportunity, and it disappeared because of volatility and because of the, you know, this black swan event. And he just can't foresee that kind of stuff. Stocks move. It's unpredictable. It's literally, I mean, yeah, it moves in a certain range most of the time, but beyond that, it's unpredictable. You don't know where a stock's going to be day by day.
No.
Right? And so, you know, it's just, there's nothing you can do about that. And so you're going to lose 10 or 20 trades out of every 100 or so. Maybe a little more if you're new to this, and that's fine. But no matter how good you get, you're going to lose 10 or 20 trades per 100. That's just how it goes. So, sometimes I take issue with when people say, learn from your losing trades. Sometimes there's nothing to learn. Sometimes you followed your strategy and you did everything perfectly and you still lost. That's not your fault. There's nothing to learn. There's nothing to gain. There's nothing besides that was a statistic. That was a probability that it could lose. There was a probability it could lose, and it did. You could, it's like you could flip a coin 1,000 times, and no matter how good you get at flipping a coin, you're never going to get all heads.
No.
Right? I mean, it's going to even out to 50-50 over time. You can't get so good that, I can flip heads every time. You can't do that. It's literally random. I mean, assuming you don't cheat. But, it's like, this is the same thing. You have a good 70% plus chance of winning, but 10, 20, 30% of the time, you're going to lose. That's not a failure. That's not a fault. That's not like, I should have done better. I should have seen that. Like, I have this financials trade. How should I know? How was I supposed to know the financials were going to get crushed the last 2 weeks? Do you know what I mean? Like, you can't see that. You can't know that. And so there's no point being upset about something you can't have known. If there was a lesson in it, then learn the lesson, but sometimes there's just not. So that's why I don't like when people say, learn from your losses. There's nothing to learn a lot of the time because it just happens. And
I think you can when you're first starting.
Yeah, when you're first starting, let's say, I made this mistake. I didn't follow the strategy in this way, and so that resulted in a loss. But if you follow the strategy and you still lost, number one, that's not a fault of the strategy. You don't have to go out and find a better strategy. Number two, it's not your fault. You don't have to go out and become better. I mean, you should always strive to be better, but it wasn't your fault. And so number three, there's no point of being upset because there's literally nothing you could have done, right? You're going to lose 10, 20, 30% of all the trades you make. It's just what's going to happen. And so the sooner you can come to terms with that, the better off you'll be. That's just how it is. The sooner you can come to terms with that, the better off you'll be.
It really goes back to elementary school when you learn that losing is okay. Like in sports.
Mm-hmm.
And you're always taught to have good sportsmanship.
Mm-hmm.
It's the same thing in the market.
I even think it's different because in sports, there's always someone better, but it is down to skill.
Yeah.
Whereas with the market, it's just probability. It's like rolling dice. You can't roll dice so well that you get sixes all the time or get, whatever. Like, it's literally pure chance.
But the concept, though...
Yeah, I know. I'm just saying, like, with sports, you can be like, I can do better. I can try more. I can, improve myself. I can practice more. And my exact point is, with the market, no, you can't.
Yeah.
You can't do that. And so realizing that and saying, okay, well, I did everything I could. I followed the strategy, and I still lost. Well, that's going to happen. That's just the market, right? You win a lot, you lose some. It's just what happens.
Yeah.
Like, you don't chastise yourself for waking up and it's raining, right? Or, waking up and the weather's bad. There's a thunderstorm or something like that. Like, that's not your fault. It's not an exact analogy, but, like, the weather is the weather. It could be
even waking up on the wrong side of the bed. Like,
right.
That's not your fault either.
You could wake up and it's sunny. You could wake up and it's raining, and it's just kind of what happens, right? Yeah. You're not at fault. It's just what happens. And so it's the same thing with trading, especially options, is that you're going to lose. And you have to find a way to just accept, okay, I lost that one, And, it stinks looking at your portfolio and seeing the value going down. I hate that. Everyone hates that. You could be in the market for, 50 years and you're still going to hate it. I think that's just a normal human tendency. But you have to realize, and this is one thing that's helped me a lot, ignoring the day-to-day fluctuations of your balance. What really helps me is every day, or however much you want to, just looking at all your positions, maybe looking at your balance once, but not judging it. It's just sort of like, okay, well, this is like the temperature outside. It's more or less meaningless, and it will change second by second.
And you usually don't check till after it's done.
I check once in the, earlier in the day, but I don't take my final reading until like much later.
Because yesterday you were like shocked.
I was, because I checked early not early in the morning, but like midday, and it was way down. And then in the evening, it was like, whoa, wait a second, where'd all that come from?
Kind of a nice little gift.
Yeah, exactly. But
that's not a bad trick to like just, you could kind of check a little, or just not check till the end of the day.
Right. So what I'm saying is like, yeah, check your balance, but don't put any stock in it.
Nice pun.
It wasn't really intended. But, check your balance. Don't put any, anything into it. It's just what it is right now. But really what you want to look at is your positions. Look at all your positions, and some will be winning, some will be losing, some will be kind of transitional where you don't know yet. And if that's the case, ask yourself, is there anything I can do about this today? Do I need to roll it forward? Do I need to, adjust it somehow? We'll talk about adjustments in the future. But is there anything I need to do with this trade? If not, just move on. And if you can make a new trade, if you have the money to make a new trade, then make a new trade, right, to balance out your portfolio. But that's all you can do. Follow the strategy and just let it work out and make the adjustments as you have to. But don't focus on the day-to-day fluctuations. You could be up 2% Monday and down 3% Tuesday and up, 1.5% Wednesday. I mean, it's just going to go up and down all week. Some weeks you'll be really lucky and you'll be up all week. And some weeks you'll be really unlucky and down all week. And you just can't tell. And it doesn't mean anything. As long as you're following the strategy, it doesn't mean anything if day by day you might be up or down or sideways or whatever. It doesn't really mean anything. So you want to focus on more long term. Let me drink. You need to focus on more long term, like how am I doing in a month? How have I done in the last month? Or in the last quarter, or in the last 6 months, whatever. Right? And that's what you're going to focus on.
Yeah.
Instead of how am I doing day by day or week by week. And that's really important. So, it's just a matter of not paying too much attention to the noise. Just let it, day-to-day fluctuations, and that's fine. So, you can't be bothered by that. That's just kind of what happens in the market, right? And like I said, there's not really any better strategy. Like, it's just strategy is what it is. If you find a strategy that works, I mean, test it obviously, but the one we've been laying out really does work. And if you use it, you will win most of the time. There are other strategies out there. You have to test them for yourself. But just because a strategy might be losing today doesn't mean it's not a winning strategy. So that's really important. Like, people chase strategies like, I don't know, just people chase winning strategies. They if one isn't working, they try to find another one. And if that one's not working, they try to find another one. And it's just like any strategy is going to lose sometimes, right? No matter what you do. A good example is, I mentioned the Motley Fool that I'm subscribed to, right? And, I mean, I have mixed feelings about them, but they, give stock recommendations every week. But some people will buy their stock recommendations and they'll say, I bought this stock and now it's down 10%. And so obviously you don't know what you're doing. Why did you recommend it? Well, how should they know? Like, they're going to give good recommendations, they're going to give bad recommendations. The thing to look at is how do they do over time, right? And so, how do you know, or how are they going to know that a stock they recommended is going to go down? Like, there are certain things that just can't be foreseen. And so, if you buy into one of their stocks and it goes down, that's no one's fault. It's just the risk you take, right? But over time, is it working out? That's the thing to look at. Over time, is it working out? So, that's just, there's a lot that could be said with all that, but mainly I think what you need to look at is let losing be a normal part of your experience. Don't, dramatize it. Don't catastrophize it. Just let losing be a normal thing that happens from time to time, even regularly. It's going to happen. And don't fear it. And the more you fear it, the more that it tends to rob, from your experience. It tends to steal your enjoyment of the process of trading. So there's just nothing you can really do about that. So you have to find a way to just be okay whatever's happening. Trust in the process, trust in the strategy, and whatever happens day by day, like, oh, I'm down a bit. Okay, that stinks, but, that's just what happens, right? Oh, I'm up a bit. Oh, that's awesome. Take your enjoyment where you can, but find peace no matter what's going on. Trust that it's going to work out. One final thing I want to mention is, I think you would stress a lot less, just people in general, if they don't invest money they don't need, right? So if you're investing money you're going to need in the next year or so, it depends what part of the process you're in. But if you're investing money that you could need and you're going to lose some of that money or potentially lose some of that money, of course you're going to be stressed, right? You don't want to be investing money that you're going to need in the short term. This should be all excess, all, savings, money that you just don't rely on to survive, to pay the bills, to pay the rent, to pay utilities, whatever, to buy groceries, right? And some people will do that. They'll put money at risk that just shouldn't be put at risk, right? And that's another thing that really goes into it is, just don't invest money that you really don't want to risk. As I've said, you should be willing to lose every penny of what you put into a trade. You'd be willing to lose every penny of what you risk. If you're not, don't make the trade. And that will really help. So, there's a lot of stuff that goes into that. I've talked about position sizing before. That really helps with anxiety. Not taking too large of a risk. That really helps. But you really just have to see what's your risk appetite. I think, are you the one that laughed at me about that term?
I don't know if I did.
I don't know, someone did. But what's your risk appetite?
I like it, though.
I know. Like, how averse are you to risk? If you're super averse to risk, you just aren't willing to lose that much, then options probably aren't the thing for you because they're super volatile, right? Maybe you want to get into more ETFs and bonds and that kind of stuff, more traditional long-term investing, and that's fine. You have to define all that for yourself. So it's just a very personal journey. No one can tell you how to take it, how to proceed down that journey, and it's all just your own choice. And so do whatever you have to do to learn and educate yourself. But in the end, it's up to you how much risk you want to take, how much money you're willing to put on the line, and everything like that. It's just a personal decision. Right, I'm sorry. I couldn't really think of anything to ask you today.
That's okay.
Christine was like, make sure you ask me something today. But I literally have nothing. So I'm very sorry about that. But
that's okay. It was still, well, there really wasn't anything to quiz.
Yeah,
it was a pep talk.
Sure, I guess.
Well, it was good, though. Because I love how, you talked about balance. It's about balance.
It is.
You don't treat this like you're going to a casino.
No, and that's the thing. You don't want to gamble.
This is long term.
This
is not for short term.
Exactly.
It can be, but it's normally not.
Right, exactly. I mean, you might have short-term, like might want to speculate or whatever, but it's not a casino. It's not for gambling. This is for long-term gains, and that's just how it is. So you have to be willing to take the long view on this.
Right.
Not, oh my gosh, I'm down, 2% today. That means I'm failing somewhere. Like, you can't look at it like that.
No, you can't.
No. So hopefully that helps. I know losing is never fun, but it does happen. In fact, I think I might be down for the week, which is fine, mostly because of financials and the NASDAQ and...
You never know.
everything. So, yeah, you really never know. Yesterday I thought I was down, but I hope this makes sense. If you want to see the show notes for this episode, you can go to possiblepromise.com/12, and you can see the show notes there, and also put the quote there that I read earlier. And if you have questions, feel free to ask. I'm always happy to answer your questions, or read your thoughts about the episode. So hopefully it's resonating with you. But otherwise, I hope that everyone has a wonderful weekend. And we'll be back on Monday for another episode of the Possible Promise podcast. Thanks, everyone, and have a wonderful weekend.
Have a wonderful, wacky weekend.
Bye.
Bye.